Ladies and gentlemen, welcome to Hibiscus Petroleum Berhad's Extraordinary General Meeting. This presentation provides you with a brief outline of our journey since our IPO, which took place on the 25th of July 2011. More particularly, we would like to focus on the 3D oil transactions as specified in our circular to shareholders dated 4th December 2012. 3 months after our listing in October 2011, and as a first step towards value creation, we executed agreements with Rex Oil and Gas and Schroders to acquire a 35% interest in Lime Petroleum plc. In April this year, we concluded the Lime transaction, thus completing our qualifying acquisition, which transformed us from the first special purpose acquisition company, or SPEC, in Southeast Asia into the first and only listed independent oil and gas exploration and production company in Malaysia. Through Lime, we currently have exposure to 4 concessions in the Middle East and a further 4 concessions in Norway. Our concessions in the Middle East comprise 3 offshore blocks that are the Rak North Offshore and Sharjah East Coast Offshore in the UAE and Block 50 in Oman, as well as 1 onshore asset, the Rak South Onshore Concession. In the Middle East, Lime is interpreting new data acquired in 2012 and conducting geological studies whilst also preparing for a drilling program. In Norway, Lime has been given the opportunity to add more assets to its portfolio and is reviewing the seismic data of the various concessions before making a final decision. We are greatly encouraged by the progress of Lime and, for our part, are adding value by leveraging on our technical experience. While we are pleased with technical progress on the Lime concessions, we are always looking to further enhance shareholder value. To date, Lime's 8 concessions in the Middle East and Norway are between early to advanced stages of exploration. To further mitigate our overall business risk exposure, we intend to balance our concession portfolio with assets that are in the development and production phases of the oil and gas exploration and production lifecycle. Such a step will ensure business sustainability and allow the development of a steady cash flow stream for the company. As a first step, and in line with our portfolio balancing strategy, on the 14th of August 2012, we entered into an agreement to acquire an interest in 3D Oil Limited, a Melbourne-based exploration and development company quoted on the Australian Securities Exchange, or ASX. On the same date, we also executed an agreement to participate directly in 3D Oil's exploration permit VIC P57. Incorporated in 2003 and listed on the ASX on the 22nd of May 2007, 3D Oil has a market capitalization of approximately 25 million Australian dollars. In 2004, the company acquired a 100% interest in the VIC P57 exploration permit, covering an area of about 480 square kilometers in the Gippsland Basin, located in the Bass Strait, offshore Australia. This permit was renewed for a 5-year term in August 2011. Under the deal with 3D Oil, we will subscribe for 13% of their enlarged share capital for 2 million Australian dollars. We will also acquire a 50.1% farm-in interest in 3D Oil's exploration permit VIC P57 for 13.5 million Australian dollars, with an additional project contribution of 13.5 million Australian dollars towards the development of the asset. Under the proposed transaction, Hibiscus is to be the operator of the concession. The transactions will be funded from proceeds raised from the private placement of our convertible redeemable preference shares or CRPS exercise, which you have previously approved, as well as from internal funds. We have been guided in this transaction by an experienced team comprising local and international advisors and consultants that include the Vic P57 exploration license lies to the northwest of the Gippsland Basin, about 8 kilometers off Victoria's coastline. The Gippsland Basin has been one of Australia's most prolific oil and gas producing areas, with initial resource estimates of more than 4 billion barrels of oil and condensate reserves and 9.8 trillion cubic feet of gas. Four wells in the Vic P57 concession area have been drilled and tested, leading to the West Seahorse oil discovery. West Seahorse is a small offshore oil field with contingent resources of 5.5 million barrels of oil and further prospective resources of 1.8 million barrels, also of oil. It was discovered in 1981 and lies approximately 14 kilometers from the coast of the state of Victoria in approximately 40 meters of water. Other key identified exploration prospects in Vic P57 include Sea Lion and Felix. Sea Lion is a robust exploration prospect close to West Seahorse and some 4 kilometers from shore. Felix is a less robust but potentially larger exploration prospect. As the West Seahorse field has proven oil reserves, we have established a project team in Melbourne, which is currently working on the concept and front-end engineering design studies to put the field into production. We are considering various options to develop the field. One development scenario that we are seriously considering is the use of a mobile offshore production unit or MOPU with dry Christmas trees and a flow line that ties production from the MOPU back to shore. We have an aggressive development schedule and subject to the Australian regulatory authorities' approvals, we hope to obtain the West Seahorse offshore production licence by mid-2013. Onshore regulatory applications for the onshore pipeline section are expected to be more extensive. Hence, approvals are expected to be obtained in January 2014. Installation of major components would occur towards end 2014. And after a 2-month drilling program, first oil from the field is expected to flow by the first quarter of 2015. As part of the transaction, we have obtained independent valuation of the asset we are investing in. Risk, an independent subsurface consultant based in Perth, Australia, assessed the hydrocarbon resources in the West Seahorse, Sea Lion and Felix fields and estimated the cost to develop them. Based on risks data, Pareto Securities valued Vic P57 using 2 methodologies. Pareto Securities has provided 2 sets of valuation ranges for the 50.1% interest in Vic P57. Under both valuation scenarios, our offer of 13.5 million Australian dollars is well below the fair market value. As with any major acquisition, our proposed acquisition of 3D oil carries with it some risks. The major risk factors include the following. 1. VIC P57's valuation, potential revenue and profits may fluctuate with changes in the price of oil and gas as a result of factors that are beyond our control. 2. There exist the usual oil and gas exploration, development and production risks. These include dry wells, unexpected drilling conditions, blowouts, oil spills or delays in obtaining approvals. 3. The current resource estimates have been based on factors, assumptions and variables which are best estimates currently, but may prove incorrect as more data is gathered over time. 4. Exploration activities are by nature capital intensive and involve a high level of risk. There is no guarantee that expenditure on the Sea Lion and Felix fields will result in new discoveries of oil or gas in commercial quantities. Despite the risks, we are positive about our proposed transaction for a number of reasons. We would be able to capitalize on the potential upside of the 3D Oil's shares, which we believe were undervalued at the time of subscription. We subscribed for the 3D Oil shares at 6.6 Australian cents, which is significantly lower than the net asset value of 3D Oil of 14 Australian cents, a discount of 52%. Most importantly, our farm-in of VIC P57 is in line with the portfolio balancing strategy of Hibiscus Petroleum. It is also attractive given that the West Seahorse is a proven discovery, while there is significant exploration upside in the other identified prospects, particularly Sea Lion. Furthermore, Pareto Securities estimates an internal rate of return of about 32% for the proposed farm-in, with a payback that will be achieved within 3 years. Under the farm-in agreement, we were accorded favorable terms to recover our farm-in investment, where we will receive 74.9% of petroleum produced until the farm-in investment of 27 million Australian dollars is fully settled. After that, the distribution of petroleum produced will be based on our 50.1% participating interest in VIC P57. To date, our proposed transaction has been approved by all the relevant Australian authorities, namely ASX, the Foreign Investment Review Board and the National Offshore Petroleum Titles Administrator. We now seek your approval as our shareholders before Hibiscus Petroleum can formally acquire an interest in VIC P57 concession and become its operator. While this presentation provides you with a framework for the proposed acquisition, more details can be found in the circular to shareholders dated 4th December 2012. We hope you will take the time to read this circular and obtain an informed view of the transaction. The board believes that our farm-in of VIC P57 and subscription of 3D Oil shares will increase our shareholder value, and we look forward to your support of the investments that are being proposed today. Thank you.